Louis Camarasano from the Smaulgld blog. Louis, thank you so much for joining us today.
Thanks for having me, Elijah. How are you doing today?
I'm doing just great. How are you?
Just grand, thank you.
Awesome. So the first topic I'd like to discuss is the Fed's actions yesterday. It seems like they're talking more dovishly. They're saying that maybe not too much more raising interest rates. What are your thoughts?
Well, I don't know if he didn't say not too much more interest rates. I think it was a bit more nuanced than we're not going to raise interest rates anymore. He went back to the fallback that we're going to take a look, which is basically what they should be doing anyway. He said that interest rate policy is not on a set path. Now that's interesting because they had been saying we have a gradual rate hike path, and they had touted the advantages of why a gradual rate hike path is the right way because you don't do too much and you can gauge its effects. And now he's basically saying the same thing, except not saying we're having a set gradual rate hike path. So you can see how it's nuanced in a way that it sounded dovish, but it really doesn't change anything. And what it is, it's kind of clever, is a way of being able to sneak in another rate hike, but have people think that there's still hope that they're not going to continue on their rate hike path as gradual because they're going to take a look and see. But taking a look and see may mean that they continue to raise interest rates. So I think it's a little too early to interpret what the Fed's going to do, but the Fed is very clever in doing this type of forward guidance. If you recall, at the end of QE, when they finally finished it, they talked a very tough game about raising interest rates, and they didn't raise them for 2 years. And when they finally raised them, they raised them at the end of 2015, a quarter of point, and then they continued to talk about raising interest rates, and they didn't pull the trigger again for another year until the end of 2016. So they get a lot of mileage out of talking that they're going in a particular direction, either hawkish or dovish, and then not actually having to do it in the case of being hawkish, but in the case of being dovish, they might actually hike rates, but they could be considered dovish rate hikes. But a rate hike is a rate hike, and no rate hikes are no rate hikes, whether you call them hawkish or dovish. So it's something we have to keep an eye on. What's interesting is it looked like the gold and silver markets were not as easily fooled by this double talk that Jerome Powell threw out there than the equity markets. The equity markets were always looking for an excuse to rise, and they soared 2.5–3% across the board, and they're up slightly again today. Whereas the gold and silver markets, gold went up 0.5%, and silver went up like 1.25%, but that's, it doesn't take much for silver to go up 1.25%. It goes up 17 cents, and there's your 1.25%. So I think we need to see what the Fed does in December, but even then we won't have clarity because people will be hearkening back to this speech where they're taking this gradual approach. It's not on a set path, so they're not going to read into that gradual rate hikes are still on the table, even if they do raise rates in December. Now, if they don't raise rates in December, then we know that there's something up, and I think that's where you might see the gold and silver market react more dramatically, because that's not just talk, that's an action. They've actually stopped the rate hikes. But I would suspect they go ahead and raise them anyway, and the stock market will take that as, well, let's discount that because they're not on this gradual rate hike. They're really just taking a look and seeing they're not on a set path.
And what was your perspective on how the stock market did react? It definitely had a bounce yesterday and continued a bit higher today as we record on Thursday. What is your perspective on that? And I mean, it seemed like we were on a pretty bad path. We were seeing lower highs and lower lows. Some people were predicting, a crash. Where do you think we were, and has that changed since the Fed's announcement?
I think that the Fed has been very clever in how they manage both the stock market and the dollar. A lot of people say you have to sacrifice the dollar to boost the stock market, and the Fed manages to keep the dollar in the range at which it wants, and also manages to keep the stock market on an even keel and heading higher, because the dollar and the stock market, in that order, I think, are the two major assets that the United States has financially on the international stage. And without a strong dollar, or at least a confidence in a dollar, doesn't have to necessarily be a dollar index over 95, but without dollar confidence, you don't get the investment into the U.S. stock exchange. And if the U.S. stock exchange doesn't have some type of floor or put under it, that's exactly what Powell did, came out and said exactly the right things without doing anything, pushes the stock market higher. So the stock market generally tends to react to the Fed a bit more now than gold and silver. Gold and silver seem to not react until you get something definitive. And the last time we saw a definitive move really in gold and silver was Brexit. Those are the kind of events that really push gold and silver. Jawboning at the Fed doesn't seem to really either frighten gold and silver investors or get them excited in any direction. But the stock market takes its cues directly from, it seems, and that money will flow into risk assets if they perceive it to be a dovish or bullish Fed.
Now, moving to get a bit more to precious metals here. What is your perspective on the recent price action, and how the Fed's announcement was impacted precious metals, and where do you see them going from here?
We spoke earlier in the year, and I thought that gold would outperform silver, and I think that's pretty much happened, and I think that's going to continue to be the case until we get some type of catalyst for both the precious metals, because whenever precious metals either languish or go down, silver takes a bigger hit. And then whenever precious metals go higher in a significant way, then silver goes up a lot more than gold after the initial period where gold heads out in front. So right now we're seeing that consolidation period where we're in a neutral to bearish mode for the precious metals, and you see silver drifting lower away from gold and pushing your gold-silver ratio up to about 85, 86, 87 to 1, which is pretty high. It's like the highest since the 90s. And it's basically been heading in that direction for ever since the precious metals entered the bear market.
Lewis, are you still there? I'll call you right back. Just 1 second. Hello? Hello? I still can't hear you. Try calling me back. The dovish Fed action hasn't been positive for precious metals?
I think it's because, as I mentioned, what the Fed is saying is only talk, and I think precious metals investors need to see more. If you're going to move into gold and silver, you need to know that they're really not raising rates, not just talking about perhaps not raising rates and taking a look-see. I think the precious metals traders have been burned going long on maybe what appears to be these signals that don't necessarily play out. And I think that's why there's not the conviction yet that the Fed really is going to not raise rates. The other thing is, I think that precious metals investors are somewhat split as to what the Fed policy means. If they can't raise rates, won't raise rates, so that means there's a problem in the economy. If they do raise rates, then that means that the economy's doing really well, and it's not quite certain as to which way you should play that. Because if the economy's doing well, see, the equity mentality is good news, bad news is good news, news is news. They don't care. Anything that you can somewhat create a story for equities, they'll go up. Look what happened with Donald Trump when he got elected. Remember the whole story after he got elected, the stock market was going to crash, and then all of a sudden they said, "Well, no, you know what? No, it's good for equities. Everything is good for equities." And the problem with precious metals is you really have to get a definitive story going, narrative that either the economy is going to collapse, there's going to be a debt implosion, something is going to happen that would dramatically change the landscape, and therefore I need to be in gold and silver. Not this preparation. There's a difference between people today that buy gold and silver for insurance, they stack it, and traders. Traders are much more short term, so they're not going to move into a long trade unless they see significant risk on the horizon, like immediately. So if Deutsche Bank were to collapse immediately, then you would see the rush into the precious metals. But when it's Jerome Powell saying we're going to take a look, it's we're not on a preset path, and it's really meaningless. It's not a significant direction. But you see the equity market people think, well, that's wonderful. It's safe to jump in the water at least today and tomorrow, and they can play this up until December, and they're much more short-term orientated into thinking that everything's going to work out for equities.
Definitely. Now, for precious metals, yeah, you're saying there has to be this narrative of like an economic collapse or some major thing happening. I remember in 2011 when we saw precious metals just skyrocket. There was the debt downgrade of U.S. credit rating, and there was
second QE.
the stock market was taking a big hit. You're saying something like that has to happen before precious metals really start going higher?
Well, I think that since silver is mostly industrial, there'd either have to be some big, great news on the overall economy globally, not the United States, so that there'd be a greater need for silver for electronics, some type of new programs where governments are investing in solar, something like that. That would help silver absent any type of collapse. Or the other thing that can always help gold and silver is a roaring economy in India and China. We've seen that Indian silver demand, the large bulk of it is, over 50% of it is silverware and jewelry. And that's not a function of worrying about a collapse. That's a function of Indian incomes rising, and they have a love for silver ornamentation and so on. So that's driving silver demand. Same thing in China with gold. They like gold also because they can buy it. They're wealthy. There's now more Chinese and Indian people than ever, and they have more money than ever. So that's another positive catalyst. So it doesn't have to be from the investment side. But if you want to see traders who do drive the investment demand, because by definition, they're traders and they're investors, then you need to see some type of shock to the economic system. But for the physical gold supply demand, you don't need an economic calamity for there to be. In fact, it's better for physical demand if there isn't, because the bulk of gold and silver demand is jewelry for gold, and outside of industry, it's also jewelry and silverware for silver. So I think for the prices to go higher on the paper side, you definitely need some type of economic shock. But on the physical supply demand side, you actually want a positive economy so that Indians and Chinese continue to buy gold and silver, jewelry, silverware, and other items of ornamentation, gifts, and so on for Diwali and the other Indian festivals.
Now, regarding that, I've heard that this time of the year, about December, January, really there's an increase in demand from Asia for those reasons. Do you think there will be this year?
It should be. It comes down to, for India, is whether there is a good monsoon or rainy season, and also whether the price is attractive. And generally what you find, I do the reports every month on Indian and silver, gold imports, and basically that ends up being their demand because they only have about 15 million ounces of silver produced domestically. That's not enough to supply their 180 to 250 million ounces a year that they import, and they have basically no gold mining. And so they rely on rural farmers make up a good portion of the gold and silver demand because they don't have bank accounts out there. And if they have a good rainy season, they're then going to convert their rupee, which is a horrible currency. It doesn't hold up well, and they know that. They're going to move that into, they don't buy bars and stack the same way we think about it. They buy high quality 22, 24 karat gold. They buy silver, sterling silver jewelry. They buy silverware. And if they have a good rainy season and the price is low, they will buy more and consequently will have to import more than if the price was higher. Now, if there is an economic shock, counterintuitively, when the prices go higher, the Indians hold back on buying. So they're price sensitive, and that shows they view gold and silver more as a commodity, as a good that you're going to buy when it's low and then not buy when it's high. Whereas the investment side likes to buy even if it's going higher because there's an economic problem and you got to get your hands on it for the insurance.
Now, yeah, definitely. And so looking forward here, I guess before we let you go, yeah, just thank you so much for joining us today and sharing your insights. Are there any last thoughts you'd like to add before we let you go?
No, I think, though, I wrote an article the other day, I did a live stream on it, that there's a lot of uncertainties in the market that are really going to come to a head next year. And a lot of it has to do with geopolitics. We still have to figure out what the impact of the Chinese-U.S. trade war is going to have, whether it will accelerate, what the responses will be. We don't have time to get into all those right now, but also what the political situation is going to be like, whether Trump is going to face a hostile Democratic Party, whether there's going to be investigations into him, whether he's going to play Pac-Man defense and unleash a lot of unclassified documents. All of that has the potential for political turmoil at home, and then, of course, economic turmoil if we see an acceleration of the Chinese-U.S. trade war. Now, those are things that are positive catalysts, not for Indian and gold, physical gold and silver demand, but for the idea that you might want to be insured against a shock to the system that might happen as a result of just those two items.
All right. Well, Lewis, where can people find you online?
Smaulgld.com is the website. I also do a live stream every night around between 7:30 and 8:30 on YouTube, and then, of course, all the social media channels as well.
All right. Awesome. Well, we always appreciate your time and when you come on and sharing your insights. And yeah, thank you so much today.
Thank you very much, Elijah.